Ladies and gentlemen, good day and welcome to the Apcotex Industries Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Apcotex Industries Limited. On behalf of the company, I'd like to thank you all for participating in the company's earnings call for the fourth quarter and financial year ended 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us and hand it over to them for opening remarks. We have with us Mr. Abhiraj Choksey, Managing Director, and Mr. Sachin Karwa, Chief Financial Officer. Without any further delay, I request Mr. Karwa to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good afternoon and welcome everyone to today's earnings conference call for the fourth quarter and financial year ended 2023. I hope you had an opportunity to review the financial statements and earnings presentations which have been circulated and uploaded on the website and the stock exchanges. Let me first brief you on the financial performance for the fourth quarter of financial year 2023. The revenue from operations were reported at 256 crore, which declined by about 8% on year-on-year basis and increased by about 9% on quarter-on-quarter basis. Operating EBITDA stood at rupees 34 crore, which declined by about 25% on year-on-year basis and increased by about 11% on quarter-on-quarter basis, with EBITDA margins reported at 13.32%. The net profit stood at rupees 23 crore, which declined by about 25% on year-on-year basis and increased by about 14% on quarter-on-quarter basis, and PAT margin stood at 9.06%. For the financial year, we reported highest annual revenue at around 1,080 crore, which grew by around 13% year-on-year. Operating EBITDA stood at rupees 159 crore, growing by around 13% year-on-year, with EBITDA margin standing at 14.68%. The net profit was around 108 crore, which crossed 100 crore mark for the first time, with a growth of approximately 9% on year-on-year basis. PAT margin stood at 10%. Q4 FY23 margins were impacted due to overall pressure on demand in nitrile latex, while NBR margins returned to normalcy due to fall in import freight. On the capex front, both the projects in Taloja and Valia were commissioned during the quarter with capacity of 35,000 metric tons per annum for multi-purpose latex plant at Taloja and 50,000 metric tons per annum for nitrile latex plant at Valia. Additionally, I am pleased to announce that we have declared a final dividend of rupees 3.50 per equity share. With this, I would like to open the call for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankit Kanodia from Smart Sync Services. Please go ahead.
Thank you for taking my question and congratulations on good set of numbers. Sir, so my first question is in terms of the revenues, how do you...
Slightly, the audio is muffled from your line. Please use the handset mode.
Is it better now?
Yes, sir. Go ahead.
Hello. Okay, great. So I just wanted to understand in terms of revenue, how much of this number is volume-led and How much of it is value-led, if you can give some color?
Yeah, sure. For the quarter, I think the volumes are flat, so most of it is due to sort of net realization going up or product mix changes. For the year, I think we are up. Sachin, do you have the exact number for volume increase for the year? But I think it's about
8%.
8%, yeah.
Okay, great. So in the last quarter, we mentioned that basically the EBITDA decline was due to raw material and chemical inventory, those were which were being carried on the books. Are those the same reason this quarter as well?
Yeah, I mean, look, that was no. I mean, for Q3 definitely that was a big impact. In Q4 there was a slight impact on that. In fact, for one or two raw materials will still carry some of the high cost raw materials. Maybe that will be exhausted by April and May, but largely that's been exhausted. I think as Sachin mentioned in his opening remarks, we have had two reasons. One is the NBR margins, compared to Q3 and Q4 and of last year and Q1 of this financial year were fairly strong because of shipping rates being very high. So we obviously, being the only manufacturer in India for NBR, that was an advantage to us. And so that is normalized sort of in Q3 and Q4. And the second is that nitrile latex margins continue to be extremely weak. Mainly the glove market is, as you know, there were a lot of extra gloves produced during COVID times and then post-COVID over the last year. Glove demand has been extremely muted, down by 20-30% compared to the previous 2-3 years. And so margins for the nitrile latex for gloves are even lower than pre-COVID levels. So that's been a challenge, for us, frankly. And we have, of course, we're making small quantities so far, or we were making, and now with the new plant coming up, the volumes will go up. So our cost structures over the next 3-4 months should also go down. That should help the margins. But that is a challenge this year.
Yeah. So you don't see the demand picking up anytime soon, or do you see any technical recovery there in the glove demand?
Yeah, I mean, look, demand should pick up because it should go back to pre-COVID levels. It's just that there's a lot of inventory in the pipeline for gloves, which is causing pressure for the raw materials as well. And additional capacity has also been created over the last couple of years. So I think in terms of volumes, it's not an issue. We still think we will achieve our targets in terms of volumes for the year. It's just that margins are obviously lower, and being a new entrant, it's difficult to get any premium margins at this stage. But over time, we will see how it goes. I think in the long term, we're still bullish about the business. We're one of a handful of manufacturers that can manufacture this product. We've been manufacturing quantities over the last 3-4 years, and now with the 50,000 ton latex plant, obviously our volumes are going to go up.
Sure. And one last question before I go back in the queue. How has been the performance of Apcotex for this quarter, and how do we see that in FY24?
Yeah, excellent. We've had some fantastic growth because we've entered new markets in the year. I don't specifically want to talk about the quarter, but for the year it's been great. It's obviously a much smaller part, as I keep saying, of our total business, but we're growing it slowly but surely. We've entered new markets, new states, and yeah, I think we're quite happy with the growth. I think it should be around 25% or 25 to 30% this year. Last year.
25 to 30%. What is this number? Growth.
Growth.
Okay.
Yeah.
Okay. And in terms of the total contribution to sales, would be still in single digits?
It's much smaller. It's not much. We are not revealing those numbers yet, but it's not much.
Okay. Thank you so much. I'll get back in.
Thank you. Yeah.
Thank you. The next question is from the line of Aditya from Securities Investment Management. Please go ahead.
Yeah, so hi, sir. Thanks for the opportunity. Sir, we have commissioned 2 plants in this quarter, but there hasn't been much increase in our OPEX cost. So will we see an increase in our OPEX cost from next quarter onwards?
Yeah, I mean, there will be a slight increase, but the way the plants have been designed is it's not a significant OPEX cost increase.
The only OpEx that will go up is, in terms of fixed costs, that will go up is, some manpower in both the plants, and I don't think it's going to be significant at all.
Okay. Okay.
And obviously, when you say OpEx, what exactly do you mean? Obviously, raw material, power, and utilities and all will go up, of course, as the volumes build. But both the plants were commissioned in March, so obviously a large chunk of the growth will come in this year, going forward.
No, so my question was related to the fixed cost because
fixed cost. Yeah, so it's not much of a fixed cost increase in either case. It's just manpower.
Okay.
And maybe some maintenance and all, but we don't expect much in the first couple of years.
Okay. And if you could throw some light on, on the competitive intensity we are seeing in the synthetic latex segment. So with reducing freight costs and, slowdown in global economy, are we seeing global players exporting more products in India? Because I think similar situation like this has happened with us before. When there is a slowdown in global demand, competitors try to dump their products in India. So are we seeing this kind of situation happening over here?
Not in latex at all, because latex is more of a regional business. So on the contrary, in fact, I think we are doing better at exporting in the latex market. But in NBR for sure, that has been the case with freight rates, shipping freight rates being quite low now. We are seeing a higher competitive intensity for NBR.
Okay, so not much competitive intensity in the synthetic latex.
No, I mean, look, there are local players in India, which is mostly us and one more company hold about 80% of the market share. So both the companies have recently increased capacity. So I think, in the short term, there is a little bit of excess capacity, I would say, for the next year or two, but it's not, I mean, margins have been affected a little bit in, for example, styrene butadiene latex. The main place where margins have been affected is nitrile latex for gloves, where there is no other manufacturer in India, and we are exporting. I think globally there is a glut of gloves and therefore latex as well, and that's caused a real slowdown in margins, or a decrease in margins rather.
Sure. And in the synthetic latex segment, do some industries here, like adhesives or paints, have higher margins compared to a paper or carpet?
Yes and no. I mean, in some cases we do see, yes, that within. So, for example, we are in construction, carpet, paper, textiles, and I would say within, and then there are some specialty as well. So the specialty applications within each of these industries that we are supplying to, there we would see higher margins. So I would say overall, margins are fairly similar. Paper is generally lower than the rest, but not by much. By and large, they are very similar if you see an average of, let's say, 4 or 5 years.
The reason why I was asking this question is because, Syncommerce has been moving out from the paper carpet industry because it is seeing that it is a commoditized industry, and it is focusing more on the adhesives and coatings industry. So, is a similar situation you are seeing in India as well?
Not really. No, not really. I think we come from a smaller base. In Europe, it's a little different. What's happened, for example, I'll give you paper. Paper in Europe, mills are shutting down as the demand for paper has gone down due to digital, overall, the digital industry has taken over. In India, we came from a very low base, and paper includes packaging as well. So as our population is growing and as our GDP per capita is growing, which is at a very low level right now, as you know, $2,500 or even less than that. Therefore, we are not seeing that in India at all.
Okay. So there is scope for, these industries to grow, like paper and carpet industry, to grow in India.
Yeah, absolutely. Okay. We're not seeing it in India. And we are largely, obviously we export as well to the Middle East, Southeast Asia, and we're not seeing it there either. But I agree. The company you mentioned is largely in Europe for those paper carpet, and Europe is going through a tough time even in terms of energy costs and other issues. So.
Right. So just a related question. The increase in exports which we are seeing, one of the reasons is because the players over there are shutting down, are not catering to these kind of industries? Would that be one of the reasons which is why we are seeing an increase in our exports?
No, I don't think they're not catering. I think they may be defocusing. That may be, at least some information that you have, but of course they're still in the market as far as we know, and we do compete with them in some of the export markets. So.
Okay, sir. So I'll come back and listen.
Thank you. Thank you.
Thank you. The next question is from the line of Karan Bhatelia from Asian Market Securities. Please go ahead.
Yes, I'm audible.
Yes, Karan, go ahead.
Yes, congratulations for the 1,000 crore top line and the 100 crore bottom line.
Thank you.
Sir, how has exports done for fourth quarter and for the year FY23, and how you see that at least for the next 1 year to see so?
Sachin, do you have the numbers in terms of volume growth for exports?
Yeah, for the quarter we have an export growth of, in volume terms, is 28%, and for the year we have grown 16% in volume.
15.
16%.
Okay. And any further clarity on the NBR project, doubling of capacity out there? Anything concrete out there?
We are going through the detailed engineering, which should be done in the coming quarter, and then we will, once we have the final costing, and we also want to just see how the market is in the next few months, and then we'll take a final call. Yeah. No, not yet.
Okay. And apart from the 7 user industries that we cater to in latex, now which among the 2-3 might be really doing well and which may be laggard? Any qualitative commentary out there?
Yeah, what I already mentioned. Look, I think as far as paper, carpet, construction, textiles, tires, all those are doing really, frankly well. As I said, for our markets, which is mostly India, Southeast Asia, South Asia, and the Middle East, North Africa, I think we nothing to complain at all. The only latex where nitrile latex for gloves, which is a new product where we've invested 50,000 ton. So as a result of that, we have obviously pivoted and converted our Taloja plant into a multi-purpose latex plant, which includes styrene butadiene latex and styrene acrylics and so on.
Right.
So we did that. And that should be, it will take maybe a couple of years for us to fill that capacity of 35,000 tons. That is in addition to our current 65,000 tons, which is almost, more than a 50% capacity increase.
Right.
And the other is in Valia, which is a 50,000 ton nitrile latex plant. That is definitely a challenging market and in the current context. But in the long term, we're quite bullish on it, and we think that the margins will turn at some point. Volumes, we are again confident of doing. We have a set of customers that we have developed over the last 3-4 years, and that will continue to sort of, grow in terms of volumes and value. Where the concern is margins, yeah. And on the synthetic rubber front, as I mentioned, by and large, status quo, steady. Of course, there is some volatility in margins from every now and then. But if you see a course of a year or two, we've had similar margins for the last 2-3 years, I would say since 2020, after the first COVID phase, July 2020, so almost 3 years. But there have been quarters up and down, and there we are the only manufacturer in India. So.
Right. And still we don't hear anything on the dumping duties or any protection to.
No, well, there is. You can follow it. It's public now. We had filed appeals, and we've had some very good results in sort of our appeals with the High Court and the Supreme Court, and we hope to hear some good news soon. I'm not sure how things will play out, but it's out in the public domain. You can search for it and know what's going on with those anti-dumping. It's not only us, by the way. There is in the board there are many different industries and many different companies. That have filed appeals and they're at different stages of the appellate process. A lot of it is public and looking positive for everyone who's filed the appeals of why anti-dumping was not levied, even though the DGTR or the Ministry of Commerce had recommended it. So we'll see what happens. I think we should know more in the coming few months, couple of quarters.
Sure. And say, assume 150, 200 crores of top line for the new project? Like I'm talking only about the XNBR gloves.
Sorry, what is the question again?
It's safe to assume a 150, 200 crores in the first year of operation from the latex gloves part of the business.
Yeah, look, totally we can, with the capacities that we've added, we can add up to 600 to 700 crores in top line with these capacities. We hope to, get to full capacity within, and when I say full capacity, I mean on a monthly basis. So within 2 years, nitrile latex may be a little bit faster because, we are new in the market and we are able to get good volumes already in the first month of operation, although we are going through some trials because it's a new process. So we are quite bullish on that, and we think, so Sachin, I don't know if you have the numbers, but I would say, I don't have the numbers off the top of my head, but I would say about, 200 to 250 crores top line from both these plants, additional top line in the coming year should be possible.
Yes.
Thank you. Mr. Bhatia, may we request that you return to the
I'm just clarifying the same. Thank you. I'll return back to the queue.
Thank you, sir.
Thank you.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Yeah, hi. Thanks for the opportunity. One thing, 2 questions. One is on the margin side. Now, if we, and not on specifically on the quarter, but if we look at last year's whole year margin, the first half was very good, and second half we had these inventory issues and everything. And on the blended basis, we still did around 13-14% when there were push and pulls in the industry. If we have to adjust the one-off costs, would you say that this 14 to 15% is kind of a base margin at which the business will operate over a longer term because of the probably the diversification of the industries and everything?
So first of all, for the year, and Sachin, correct me if I'm wrong, but our EBITDA margins are above 15%, right? For FY22 as well as FY23.
Yeah, so we are at operating margins, operating EBITDA is at around 14.68 and 14.61 for last year. Yeah.
Operating, okay. I was looking at total margins, which include other income, I guess. But yeah, so around 15%. Look, obviously we did have in both the years 22 and 23, FY22 and FY23, there were some tailwinds that have helped us, obviously, like very high margins for nitrile latex because of COVID, at that time, and the demand for gloves was high. That is actually gone the other way around, where margins are maybe less than half of pre-COVID levels. So I think that will go back to pre-COVID levels, and therefore, I think in the short run, because of the nitrile latex margins, there might be a margin hit for a few quarters, but other than that, I think we're looking at this 14-15% as sort of the base. And of course, as we grow in our kind of business, as one of the previous callers asked, the operating expenses are not very high, in terms of increase in operating expenses are in fact very low. So as we grow and achieve economies of scale, in fact, we are aiming at a higher EBITDA margin of 17-18% in the long run when things normalize for nitrile latex. So just to give you an idea, nitrile latex margins are today much, much lower than what they were pre-COVID, and they're much lower than all our other products, which, and typically, historically, pre-COVID, they were higher than other products, other latex products. So we believe it will go back to pre-COVID levels at some point. When that happens is anybody's guess. It could be 6 months, 9 months, I'm not sure. But in the long term, it's a good business to be in. It's a technology that's not easy to master. We've done a good job in terms of being the only manufacturer from India and obviously getting approvals in a lot of customers in Southeast Asia, and South Asia as well. So we're quite happy with where we were. Obviously, the circumstances of entering the market with a new plant with a large capacity is obviously not ideal, but that's something you can't predict in time, in business.
Sure.
Sometimes.
Yeah, I understand that the industry cycle just didn't support us at this point in time, but
stage, yeah.
it should improve. One question now, in a previous question, you mentioned that among the industries, the specialty would have a higher margin, while there is no one rule for all the industries, that some industries are low margin, some industries are high margin.
No, because even within the industries there are specialty products and sort of what somebody else termed it as commodity products. But what we call large volume, fast moving products would be at a lower margin, and obviously big customers would be able to negotiate a better price sometimes. So I think I don't think it's industry wise more in our kind of business. It's more so it's application wise. So within paper you could have some applications that are for sort of commoditized paper, and yes, margins there would be less, the quality requirements are not as stringent. But then there are some applications that are obviously at a much higher margin, because they're specialty applications which are made by one or two people in the world, and we are one of them for few applications. So similarly in carpet, construction, textiles, there are, it's very similar. Yeah.
So just my question was that because what we choose to do the business will define the ROCs and our capex investments for future. So because it's two diverse industries, and within industries there is further vertical diversification. As an investor, how should we understand in terms of how do you choose upon what we will produce, what we will not produce? Because if we go by history, our margins were not what we are doing today, even in a distress environment. So what all choices in terms of, is it like we've exited some of the businesses among industries which were not profitable or ROC accretive, and even in future when we think of capex, as an investor, how should we understand our investments?
Yeah, so for example, I'll give you, it's a good example. About 10, 12 years ago, we had embarked on making emulsions for the paint industry, and we felt that was highly commoditized. Margins were much lower, and we completely exited that business. So I would say not completely, we're still making some specialty emulsions for the paint industry, but largely exited the business, I would say. Whereas in the other industries that what I just mentioned, paper, carpet, construction, tires, we believe it's the competitive intensity is not as high. The barriers to entry are quite high. So when as a business, we look at barriers to entry, we look at competitive intensity, we look at obviously the industries that we are supplying to, what is their future growth prospects, and we have a checklist of things before deciding what to invest in. So that's on a higher level. As far as day-to-day operations, obviously you look depending on customer and industry from time to time. Like I just mentioned, in the glove industry, they go through their business cycles, and unless it's a very long term, we believe that in the long term things don't change, we would not exit that industry or that customer. We have done business with customers who at low margins as well for a few months. We've made a commitment, prices have gone up. Sometimes we in the past we have done quarterly pricing. Even today for a few customers we may do quarterly pricing, and you lose out on margins if suddenly raw material prices go up. But we don't, we have our strategic customers and strategic markets, and we stick with them. We're a long-term credible supplier. So I hope that answers your question. I'm not sure if that's what you were asking, but I hope that answers your question.
Sure, I'll come back to the queue.
Thanks.
Thank you. The next question is from the line of Raj from Arjav Partners. Please go ahead.
Yeah, go ahead, Raj. Hello?
Raj, your line is in talk mode. Please go ahead with your question.
Can you hear me now? Hello?
Yes, we can.
Yeah, so looking at the all the expansions and everything which you have done, so can you give an outlook on FY24?
I mean, look, we don't really give guidances and outlooks, but as I said, the
qualitative outlook I am asking for.
Yeah, so the qualitatively, as I said, no, I can give some quantitative numbers also. This money that we have invested, or these funds that we have invested, is expected to give us an additional revenue of 600 to 700 crores at today's prices, and I would say today's prices are So today's prices, let's say, in the last few months. And so that could even go up if prices go up. Unlikely to go much lower, so this would be conservative. And then we obviously hope to get full capacity or get to full capacity within 2 years for both our plants. And that's the outlook.
Achha, so by looking at this, by FY26 and FY27, you will be doing an incremental sales of approx around 1,000 crores or so. Am I right?
How did you get 1,000 crores?
I just did a rough estimates and everything. See, 600, 700 crores.
I mean, our current plants will give us another 600-700 crores. So we are at about 1,100 crores today. We should get to about 1,700-1,800 crores. Maybe in FY26, I would say. And obviously, we have other plans to grow as well and invest. So as and when that happens, so that may happen as well over the next year or two.
All right, understood. And how about EBITDA and everything? So in FY24, can we expect a similar EBITDA range?
Yeah, look, in the last couple of quarters, we've had our EBITDA has been lower than the first couple of quarters. But on average, as Sachin mentioned, we are at about 14.5%. It's very hard to predict exactly. Had the nitrile latex market, for example, been absolutely normal, we would have been very confident in giving that guidance, saying, look, this is an EBITDA margin that going forward we should be able to do. But obviously, you've seen in Q3 and Q4, for a couple of reasons, the EBITDA margins have been lower. One reason was that we got stuck with very high cost raw materials for some of our products. And the second reason was nitrile latex margins kept falling, all through 22 and into early 23. And obviously that on an average, if we are going to have 50,000 tons of nitrile latex coming up at a lower margin, that's going to pull the EBITDA down. We believe it's a short-term issue. We're still going to push through, and get our sales numbers. So in the short term, you could see EBITDA being lower. But in the long term, as I said, look, we think with the way we're building this business and the way we have developed it, and with economies of scale as we grow, it should be at 14-15% and even higher.
All right, understood. Okay, sir. Thanks. Bye. Have a good.
Thank you. Thank you very much.
Thank you. The next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good afternoon. Thank you for taking my question. So just wanted to understand that for our outlook for 24, I'm not looking at numbers, but just directionally. So on NBR side, with fall in freight shipping costs, we're seeing more competitive intensity from imports. On the latex side, again, because of higher inventory, we are seeing some amount of slowdown. In light of both
No, we're not seeing any slowdown. Sorry, we're not seeing any slowdown. That's not true. The second part is not true. Sorry, go ahead.
That is not. Okay.
Yeah.
Okay. So my understanding was that we're still witnessing some amount of pressure in demand on the latex side, and you think that's not true anymore?
No, not overall latex. I said only nitrile latex margins.
Nitrile latex.
Only nitrile latex margins. Demand is very strong for everything. I mean, we are doing our volumes. We've been running at 100% capacity utilization for the last more than 2 years. And even in the last quarter, we didn't have, even though we had these 2 new plants come up, the reason why we didn't see any volume increase was because we had shutdowns. We had, in fact, to hook up the new plants, we had 10 days shutdown in one of our plants and a shorter shutdown in another plant. So we lost a little bit of production, which we were able to make up in the month of March from the new plant. So overall, the volumes were flat. So yeah, we are not seeing any slowdown in terms of demand. In fact, we are seeing growth in terms of demand. Our only concern for FY24 is margin, and that also main reason is nitrile latex for gloves.
Is it possible for you to share some light on or color on how much lower is it versus pre-COVID levels or versus our average company level portfolio?
Say that again. Sorry, I didn't hear you very well.
I wanted to understand the margins in nitrile latex. You said that it is lower even compared to pre-COVID levels and the overall company level margins also. Just wanted some color on how much lower is it at this point in time.
So at this point, it's much, much lower than average company level. So, for example, if you were to remove for the last 6 months, if you were to remove the nitrile latex sales that we did, which is only perhaps about 10% of our overall sales, we would, EBITDA margins would have been higher by about 100 or 200 basis points, so 100, 150 basis points. So obviously, it's very low EBITDA margins right now for our overall contribution margins for nitrile latex. And as we're going forward, obviously that's going to also have larger chunk of the volume. So next year, our total sale of nitrile latex may be 15 to 20% of our overall sales. Sachin, do you have that number as per our projections? What should be in terms of revenue?
You're right. It will be to that extent.
It will be about 20%, 15 to 20%. Yeah.
Yes.
So
the reason for the low margins is because there is an oversupply.
Yeah, oversupply of gloves, I guess. Not oversupply. Yeah, oversupply as well as reduction in demand, because there was so much oversupply during COVID that a lot of extra gloves were ordered. So, and a few new plants have come up. So I think the supply-demand situation in the glove industry has changed dramatically. And if you can actually, some of it is public information. You can check the top 4 or 5 glove manufacturers in the world, and you see and most of them are publicly listed in other countries, and you can see their results are not very good.
Any sense on, do we see this normalizing, say, in the next 1 or 2 quarters? Is FY24 also going to be difficult for this product, and probably some amount of balance on the demand supply side can be expected only in FY25 now?
It's hard to say when exactly. Obviously, it's very hard for anyone to predict. Well, some people say that, look, the glove expiry dates are within 2 years, typically. So even if gloves were made in end of 21 or early 22, they would sort of expire end of 23, early 24. So, so it's hard to say when exactly. Of course, it's very hard to predict, frankly. And there are different industry views on this. Most of them are saying 6 to 12 months,
Got it. And just one last question. Last time you were mentioning that the 50,000 tons that come in Valia is obviously only for gloves, but the 10,000 in Taloja was more like a swing capacity, and we were evaluating some newer products. Have we identified new products? Have we started? Is it expected? Any color on that?
No. So what we did with the 10,000 tons, because while we were building the plant in the last 6 to 8 months, when we realized that this is what's happening in the nitrile market, we made minor additional investments, and we have converted our 10,000 ton nitrile latex capacity in Taloja to a 35,000 ton multi-purpose latex plant, which is able to make nitrile latex and also able to make other current products, which is styrene butadiene, styrene acrylic. And that demand is very, very good, very strong. And in the first 2 months itself, we are utilizing, 20-25% of that capacity. So that's expected to keep going up over the next, 1 to 2 years. And we expect to get to 100% capacity utilization at some point in the following financial year for that plant. So that's what we have done. And so that's what I think Sachin mentioned in his opening remarks as well. I hope that's clear.
Sure. And this will be relatively better margins.
Yes, absolutely.
Sure. And just one clarification, this Taloja plant is saying will reach full utilization in 25.
Sometime in 25, yes. Which does not mean that we will sell 35,000 tons in the whole year. So, you have to break it up monthly. So, for example, if it's 3,000 tons a month, at some point in 25, we will reach 3,000 tons a month. Yeah, for the new plant.
Thank you. Ms. Mahavla, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Savi Jain from 2.2 Capital Advisors. Please go ahead.
Hello.
Yeah, go ahead, Mr. Jain.
Yeah. I just had this question on your treasury operations. I see there's a lot of active equity investing in other stocks. So I just wanted to understand what is the rationale for that.
Actually, it's not active. Frankly, we have outsourced it to experts who actually manage treasury and wealth. So we don't manage it in-house. And those, there we have invested about 70% is in equity, a little less than that. So out of 87 or 90 crores NAV, let's say 90 crores NAV, about 70%, right? Sachin is in equity, and that's also broken up into equity mutual funds, and then some PMSs also have been invested in, and that's why it feels like there is a churn, but there is really not.
Well, no, I can understand the funds and the mutual funds, etc. But I see a lot of stocks also being bought and sold. So in this, like, there's a lot of exits and new entries between 2 financial years. So that is something, and it's extremely highly diversified. There are like hundreds and hundreds of stocks. So it seems a little bit, non-core for what your business is. And it does not even look like long-term investing, because some of these stocks have been completely sold in a year, new stocks have been bought in a year. So, I mean, looks a little
I don't think we are holding that. It may be true, and we'll look into it, but
FY22 annual report, 120 direct stocks you own.
Yeah, it could be because there are, but I'm sure FY23 will be lower because we exited one of our wealth managers completely in FY23. I think we're reducing that. And the FY23 annual report, you'll see that's a lower number.
And
but our long-term view is, look, we have this treasury that we have kept for either potential non-organic, acquisition growth, or partnerships that we may get into, or sometimes we also, quick expansion decision we want to take. We should have some liquidity. And in terms of, it's not a very large amount in our view. It's about 90 crores, which is, less than 1/10 of our total revenue. It's from a market cap point of view also, it's a small percentage of our market cap. We just, and then we want to maximize, it's for the long term, so we want to maximize it, and we believe equities generally, over the long term give you better returns than, debt mutual funds or just,
but for example,
but your point is well taken. Your point is taken, and we'll try and see if we can reduce that. But the idea was not to trade in stocks. That's not the idea at all. It may be because we have given it to 2 different managers in FY22 and part of FY23, and then they in turn have given it to a couple of other PMS managers, so therefore it looks like a lot of stocks. But if you see the percentage that are in stocks is, I don't have the exact number, it would not be a lot. Most of it is in equity mutual funds.
Yeah, 10 to 15%. Yeah, that's it. Rest all in mutual funds and in debt funds.
Yes. Okay, got it. Not in terms of just the 3-year outlook you mentioned about the 2 new plants, but is there anything else that is in the pipeline in terms of new products or new categories that you're getting into?
So one is for our NBR, it's not new, but for our NBR, we are the only manufacturer in India and we've been running at full capacity. Some capacity will be freed up when we move on. Right now we're making nitrile, or not right now, sorry. Till March we were making nitrile latex in our NBR reactors, which will move out, so it'll give us some additional capacity there, maybe about 15-20% additional capacity. So we want to try and see if we want to double that capacity because the market is there. We've done a good job. We are just waiting for a couple of things to see the capex cost, the current capex cost, and whether the returns will make sense. Of course, there are new products that we're looking at as well. No decision has been taken. When the time is right, we will announce that decision. Yeah, as far as investments is concerned.
Thank you. We'll take the next question from the line of Aditya Khetan from AK Capital. Please go ahead.
Yeah, thank you for the opportunity. Yeah, it was not AK Capital. It is SMIFS Institution. So there might be some misconception. Sir, onto the demand side, as you had mentioned earlier, that demand has been started to witness an uptick into the globe side. I believe so, sir, last quarter when we discussed on this, so you had mentioned that so there is some pain of 6 to 9 months. Again, sir, this quarter we are guiding that so there could be some pain for again 6 to 9 months into the globe segment. So when we see this pain to end into the so nitrile latex segment, and what is our target utilization for FY24 when the capacity will start?
Good question. So so two things. One is that demand is not a big issue. We're 50,000 tons in the nitrile latex market is very small. It's not even a couple of % of the total market, even at these little bit lower levels. So demand is not an issue. The issue is margins. Margins are very low, unfortunately, as you've entered the market. And what was your second question?
So what would be the utilization levels from the new?
So we expect utilization levels to be somewhere between 40 and 50% for the year.
For the complete 85,000 tons or only for the nitrile latex 50,000 tons?
No, nitrile latex 50,000 tons. And for the complete, that also for the remaining 35,000 tons, there also we would have been at 50% honestly, but we have to wait for some, we have got permission to only manufacture a certain amount because earlier, as you recall, the Taloja plant was a 10,000 ton latex plant. So we had applied for environmental permission for only that amount. Now, because SB latex or other latexes, we are able to make 35,000 tons. We have applied for additional permission to make more products from the same plant. That also requires some environmental permission. So as and when that comes through, expected in the next 6 months, we should be able to increase that as well. So that we are a little bit dependent on those environmental permissions, but we are hopeful they'll come through in the next 6 months because it's not very complicated. We are not going to have to put up a new plant or anything of that sort. So hopefully in the next 6 months that should come through. So I would say, if you look at the entire 85,000 tons, I would say maybe about 35%. 35% of the total.
Okay. So onto our quarter-on-quarter. So when I was looking at looking at the raw material prices and some of the finished product prices, so there is a clear contraction in terms of spread, which is seen quarter-on-quarter. But still the numbers have been good. On quarter-on-quarter basis, so margins have been flat. So is there some have we stocked up inventory at lower prices and that benefit we had got in this quarter? That is why the numbers are which are reflecting onto the spot prices. That is not reflected into the results.
I am not sure if I've understood the question clearly.
Sir, I'm asking that the spreads of the styrene butadiene and acrylonitrile and some of the finished products like NBR, synthetic latex. So that spreads on quarter-on-quarter onto spot it seems so there is a decline. But our margins have been constant. So I was just wondering, so have we stocked inventory at lower prices because because the raw material prices, so they had started to go up. But the finished product prices, they were going down. So the spreads have contracted. So I was wondering whether we had kept some inventory at lower prices.
Sorry, I'm a little confused, but what are you looking at? So how are you following styrene, butadiene, and acrylonitrile prices?
So the styrene prices, so we are tracking some of the Chinese prices and Southeast Asia prices.
Okay, from the published rate. Okay, so I would say that and that's not always, so what happens in reality is not what is published, right? So for example, as I mentioned in the last quarter, that we had some high cost raw material inventory that we were stuck with in the previous quarter. That now in Q4 is somewhat normalized. And therefore, you can't really compare that. Just because those are published rates is not what Apcotex's rates are. So sometimes published rates may be lower than Apcotex's rates. Sometimes it could be a little higher also. So I would not look at the published rate as, it's a benchmark, but it's not really accurate, And yes, to answer your question, Q3, in fact, it's the other way around. Q4 is by and large okay. Q3 we were stuck with higher cost raw material. So even though published rates may have gone down, our rates were not down. in Q3.
Thank you.
Thank you.
The next question is from the line of Mohit Arora from SOIC Ventures LLP. Please go ahead.
Hi, thank you for taking my question. So, sir, first question is in FY24, in spite of the slight increase in OPEX, do we still see absolute growth in EBIT?
Of course. Yeah. I mean, that we do expect an increase in EBITDA. In fact, what you would see happening in FY24 is the profit before tax will go down because we have a large capex which we've never done before, and all the capex has come on stream in the last quarter. So, upwards of 220-230 crores. So that depreciation is going to start hitting in Q1. And the interest which was so far being capitalized because we had taken a loan, term loan to partly fund the capex, that will start hitting the P&L as well. So from an EBITDA point of view, you would, we would obviously on an absolute basis, we would see some growth, or we would hope to see some growth. But on a PBT level, because of depreciation and interest being going to be much higher in FY24 going forward, or from Q1 of FY24 than it was in the past. I hope that's clear.
Right.
Yeah.
And the second question is, in terms of what is the overall vision of the company over the next 3 to 5 years? Are we looking to launch any new products, or are we looking to just a broad vision over the next 3 to 5 years?
I think we have a lot of opportunity in the emulsion polymer space that we are in, and even if you see the last 5-6 years, we have done 4 things. One is grown the current business in India. Second is we've grown the current product range outside of India. Third thing we have done is acquired a company which was an adjacency for NBR and allied products. As a result of that acquisition, we were able to put up a nitrile latex plant in that facility in Gujarat. So these are the 4 things that we have done. Going forward, we want to, as I said, one thing is obviously grow in the emulsion polymer space. We're looking at other spaces as well, but obviously, I think that's premature to talk about. We will continue to grow our exports. We will continue to grow nitrile latex, NBR. So those 4 and our current product range where there's a lot of opportunity that we do see. There are some specialty products within these emulsion polymers that we're looking to add. For example, textiles, which is a very, very small part of our business 5 years ago, is now becoming a larger part of our business and another strong leg, another industry that has become quite strong for us. So yeah, various things, and obviously we're looking to grow both from inorganic opportunities. Obviously, we are evaluating all the time, and looking to grow through a new product pipeline if possible.
Thank you.
If it makes sense. Thanks. But it's too premature to talk about those.
Thank you. We'll take the next question from the line of Ankit Kanodia from Smart Sync Services. Please go ahead.
Yeah. Thank you for taking my follow-up. I just had one question related to the exports. So can we give some geographical breakup as to which part of the we have mentioned that we cater to 7 continents, but if you can just quantify that, or maybe
I don't think we're supplying to Antarctica, but yeah, the rest, yeah. But Sachin, you have the numbers for that? I mean, broad figure of, as I told you, Ankit, we are mostly in Southeast Asia, Middle East. So I want, and Middle East, North Africa, and when I say Southeast Asia, I'm covering, South Asia like Sri Lanka, Bangladesh, and Nepal, and those countries as well. If I were to venture a guess, I would say, Sachin, 80-85% of our sale is in this region.
Yes, in these two, what we're talking about, Southeast Asia
and Middle East, right? Which includes Sri Lanka, yeah. And then the rest is Europe, China, even America, some of it, South America. I mean, there's some specialty products we export everywhere, but a large chunk is in this region.
Any color of difference in terms of demand between the Southeast Asia and Europe, or do you want to comment on that?
So what do you mean? Sorry, what's the question again?
The question is, any color on what is the situation, or what is the difference in situation between Europe and the Southeast Asia, or are they the same?
As I said, Europe is not a very big market for us. mostly Southeast Asia and Middle East, and we're finding, we're growing quite well in these two markets. Europe, North America, Japan, we supply some specialty products too, and they're very steady. We have had no major issue, but they're not I would not say they're a strategic market just because of the distance it takes, and the time that it takes. Plus on the latex side, to ship that much water across continents, it's not necessarily feasible unless it's a specialty product.
Thank you. We'll take the next question from the line of Bhavya Sonawala from Samasa Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. I just have two questions. First question is, just wanted to know that glove manufacturing capex and the latex capex, have they grown in line in the past few years, if that's possible to answer?
Sorry, again, what's the question? I didn't understand.
So basically, wanted to understand that the glove manufacturing and latex manufacturing, the capex for both, have they grown in line?
I mean, look, I think glove manufacturing, because of COVID, I think a lot of people entered the glove manufacturing business because it's more of a low-tech business in that sense, and, low capex as well, lower capex as well. So we've seen a lot of companies in America, China, Southeast Asia enter the market, and as a result, there's a glut of gloves. In nitrile latex, we also have seen extra capacity come on stream, but it's been from existing players, For example, like us, we have been an existing latex player, and we have we've started manufacturing nitrile latex a couple of years ago, and then obviously invest in the plant. Similarly, some of our competitors in the industry have added some capacity in their existing plants, and some were announced, but I believe they've all been put on hold given the current market scenario.
Okay, got it. So in the last question, you had mentioned about the high-value raw material inventory that we were holding. So is it fair to assume that probably this will be the last quarter we have the high-value raw materials? Or?
Yeah, absolutely. I mean, Q3 was a big hit, I would say. Q4 was slightly less, and Q5 we are largely done with it, barring a few specialty raw materials that we keep 6 months inventory. And for example, we had ordered in September, October and it came in November, December, and then now we'll probably be done with it in this quarter. So, but yeah, I mean, it's slowly coming down, and I would say largely almost done now.
Okay. Thank you so much, sir, and all the best.
Yeah.
Thank you.
Thank you.
The next question is from the line of Aditya Khetan from SMIFS. Please go ahead.
Yeah, thank you, sir, for the follow-up. Sir, to one of the participants, you had stated that the capacity expansion would give a revenue of 200 crore. I believe, sir, we had given a guidance of 550 to 600 crore. Just wanted to clarify.
No, that's the capacity expansion is 600 to 700 crore. For this year, for FY24, is 200 to 250 crores is our best estimate.
Okay, and the total would be somewhere around 600 to 700 at peak utilization.
At full, exactly. At full utilization, correct.
Got it. Thank you, sir. Thank you.
Thank you, Aditya. Thank you.
Thank you. The next question is from the line of Om Prakash Dhoot. Please, an individual investor. Please go ahead.
हेलो, क्या मेरी आवाज़ सुनाई दे रही है सर?
हाँ जी, ओम प्रकाश जी बोलिए।
सबसे पहले तो मुझे बोलने का मौका देने के लिए बहुत बहुत धन्यवाद। साथ ही नेट प्रॉफिट के लिए पहली बार सेंचुरी लगाई है, इसके लिए बहुत बहुत बधाई हो अभिराज जी, सचिन जी। और
थैंक यू।
अधिकतर प्रश्न पूछ लिए गए हैं। वैसे तो मैं एशियन पेंट का इन्वेस्टर था, इसलिए शुरू से ही मैं एप्कोटेक्स से भी जुड़ा हुआ हूँ। बाकी मैंने रिजर्व बैंक से रिटायर हुआ हूँ, उसके बाद में मेरा अधिकतर पैसा मैंने एप्कोटेक्स में ही विश्वास करके लगाया है, जिस पे मैं खरा उतर रहा हूँ। और टर्नओवर का आपने बताया, तो मेरा ये प्रश्न था कि तालोजा प्लांट की जो बढ़ी हुई कैपेसिटी है 35,000, इससे कब तक अपन पूरा अचीव कर लेंगे, और क्या इसके जो प्रोडक्ट आ रहे हैं वो कस्टमर्स द्वारा एक्सेप्ट हो रहे हैं?
हाँ जी, ओम प्रकाश जी, फर्स्ट ऑफ ऑल बहुत बहुत धन्यवाद, आपका इतने सालों से सपोर्ट है, तो वी अप्रिशिएट इट, थैंक यू वेरी मच।
थैंक यू।
और जो दोनों प्लांट है 35,000 टन लेटेक्स है, वो जो करंट प्रोडक्ट्स हैं वही हम बना रहे हैं। थोड़े तो नए कस्टमर्स हैं, बट वो तो उसमें कुछ अप्रूवल या ऐसी कोई बात ही नहीं है। उसमें जहाँ भी ग्रोथ हो रहा है, ऑफ कोर्स एक्सपोर्ट मार्केट में नए कस्टमर्स हैं जहाँ अप्रूवल्स चल रहे हैं, वो तो कांस्टेंट लास्ट 4-5 साल 10 साल से हम कर ही रहे हैं, और डिस्ट्रीब्यूशन नेटवर्क बढ़ा रहे हैं। एज फार एज जो नया प्लांट वालिया में है 50,000 टन नाइट्राइल लेटेक्स का, हाँ उसमें सर्टनली नए अप्रूवल्स के एफर्ट्स चल रहे हैं। काफ़ी नए कस्टमर्स नेक्स्ट 6-8 महीने में ऐड होंगे, उनका अप्रूवल प्रोसेस चल रहा है, वो थोड़ा टाइम लगता है। वो सब वी आर कॉन्फिडेंट जो लास्ट 10 साल में हमने सीखा है और एक्सपोर्ट का डिस्ट्रीब्यूशन नेटवर्क बनाए हैं, एक्सपोर्ट के हमारे जो सेल्स के बंदे हैं वो सब दे वर्किंग हार्ड एट इंक्रीजिंग सेल्स, सो वी आर क्वाइट कॉन्फिडेंट। थैंक यू
वेरी मच सर, बहुत बहुत धन्यवाद।
थैंक यू ओम प्रकाश जी।
Thank you. The next question is from the line of Chandpal Singh, an individual investor. Please go ahead.
Hello.
हाँ जी, yeah, go ahead, Mr. Singh.
Abhiraj, congratulations for the good set of numbers.
Mr. Singh, please use the handset mode, sir. The audio is not clear.
Just a minute. पहले तो congratulations जी good set of numbers के लिए।
थैंक यू।
अभिराज, मैं जानना चाहता था कि एनबीआर के केस में हमारी कोई और प्लानिंग हुई है या नहीं अभी तक?
मैंने ऑलरेडी आंसर किया, पहले आंसर किया। नहीं, एनबीआर में हम डिटेल्ड इंजीनियरिंग के लिए इन्वेस्ट किए हैं, सो दैट प्रोजेक्ट विल बी ओवर नाउ। डिपेंडिंग ऑन द फाइनल कैपेक्स अमाउंट कितना होता है, बोर्ड एंड सीनियर मैनेजमेंट टीम विल टेक अ final decision over the next few months on when we want to when we want to go ahead with it. So we have not yet decided, अभी तक decision नहीं लिया है।
और मार्जिन्स नॉर्मलाइज हो गए हैं एनबीआर के?
हाँ जी, जो बीच में थोड़े बहुत बढ़ गए थे बिकॉज ऑफ हायर शिपिंग कॉस्ट, वो नॉर्मलाइज हो गए। हाँ जी,
थैंक यू, थैंक्स अ लॉट।
Thank you. The next question is from the line of Raj from Arjav Partners. Please go ahead.
Audible?
Yes, go ahead, Raj.
अच्छा, ये नाइट्रा लेटेक्स के अंदर आपने कहा कि यहाँ डिमांड इश्यू है नहीं, तो एग्जैक्टली क्या इश्यू है उसमें?
मार्जिन का इशू है। हेलो,
एम आई ऑडिबल? हाँ, तो ये इश्यू
I've answered the question. It's a margin issue. We are a small, हमारा plant is a small plant, so we are confident of doing 50,000 tons of latex. बेचना is not a problem. But आज के दिन में, because overall market is quite weak, we have to give very low prices to be able to sell. And generally the market margins have reduced considerably compared to, of course, COVID levels, but also during pre-COVID levels. So that's the reality. So we're confident of doing 50,000 tons because millions of tons are being sold in the market. So 50,000 is not a very big amount, you know.
So then it is a supply issue, no? We can assume it?
Yeah, the industry is not doing well. So there's a lot of pressure on the raw materials of gloves also, you know. The glove industry is not making money. They want to ensure that raw material suppliers also, I mean, they can't afford beyond a point, because glove prices have really fallen.
All right, understood.
So we have to support them for some time till things normalize.
Okay, thanks.
Thank you.
Thank you. Ladies and gentlemen, we'll take the last question from the line of Nikhil from SIMPL. Please go ahead.
Yeah, hi. Good afternoon. Thanks for the repeat. One question, Abhiraj, when we, because in the call you mentioned that the demand is pretty strong and we had the ability to switch the capex from NBR, nitrile latex to NBR.
No, nitrile latex to other latex.
Yeah, other latex products. What I wanted to understand is that when we put the capacity, is it like we have, how good sense of a demand do we have in terms of the market? When I'm not specifically talking on the gloves part of it, but overall as a general rule, is it like we have a commitment from the customers that 40-50% of the demand, we believe that the capacity can be filled by existing customer orders, or is it our assessment of the market based on which the capex plans are organized? And I'm not specifically talking on gloves. I understand it was a one-off scenario, but as a general rule, how do you plan it out?
Yeah, absolutely. So look, it's obviously talking to customers. We do not have contracts signed in advance before the plant comes. But, if you see the industries that the latex products that we are supplying to, and it is, as I said, 75+% in India, 25% exports. We believe that all the industries, paper, carpet, construction, textiles, tires, all in India is a growth industry. And we have talked to all our customers. We have got their 3-year projections or 5-year projections, and we want to try and invest in projects where we at least see 25-30% ROCE to when we start the project, when we plan the project, return on capital, and we see that we can utilize that capacity within a period of 2 to 3 years.
Okay. Okay.
So
Because the reason for asking the question is that because during the call you mentioned that you are, even whatever is happening on gloves, you are still confident that the capacities will be optimally utilized in a period of 2 to 3 years. So just wanted to understand that when we plan for the capacities, even in other products, is it pure assessment, or is it customers are also giving a good enough design that when we put the capacity at least 40-50% utilization, we will be able to reach easily? Is it that kind of an assessment do we have?
As I mentioned, I'm not sure if I thought I answered your question, that yes, we talk to customers, but we don't take any written commitment from customers. But yes, customers do tell us, look, we are putting up additional capacity. For example, let's say in the paper industry, right? We are close to most of our customers, and they will tell us, look, in the next 3 years, we are putting up this capacity. So we will need this much more binder or latex, over the next 3 years. So we try and time it with that, and then of course part of it is an assessment as well of, for example, construction. The construction and waterproofing market has been growing really well in India at double-digit growth, and the last 5-6 years has been growing at double digits. In the next 5-10 years also, that's the assessment. So yeah, I mean, it's a combination of assessments, seeing where new capacities are coming up, and overall seeing the growth in Asia, we being predominantly an Asian company and catering, manufacturing in India and catering to India and Asia.
Sure. Thanks a lot.
We are quite bullish about it.
Sure. Thanks a lot. Yeah.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Sachin, do you want to do the closing comments?
I think Abhiraj, you should.
So thank you everyone for joining for our Q4 conference call. We finished the year at a strong, with a good strong set of numbers. We're quite satisfied and happy. Of course, our projects were delayed by a few months, but we're also happy to share that the projects are both on stream and going reasonably well, and we hope to, now utilize this capacity over the next few quarters. We will also come back to you with future growth plans at the right time. Just one thing to keep in mind is that depreciation and interest will be going up over the next 2 quarters because of the large capex that we've done in the last quarter. So PBT numbers will be affected going forward, but EBITDA numbers is what we are going to focus on. Thank you very much. Look forward to seeing you all next quarter.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Apcotex Industries Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.